Hey, ladies and gentlemen, welcome aboard my presentation, Trading Trump 2018. It's going to be huge, and in particular, it's going to be huge for infrastructure. Hi, my name is Matthew Buckley. My call sign is Whiz. I'm the founder. I'm the CEO here at Top Gun Options. And in about the next, 20 to 30 minutes, I'm going to cover one particular part of the Trump rally that I think is just going to be taking off in 2018. And as I said, that's going to be infrastructure. Why should you listen to me? Well, how about this? Aside from Jeffrey Gundlach, who manages Double Line Capital, $95 billion firm out there in LA, me, and I think about 2 or 3 other hedge fund managers, we were the only people, folks, in the entire world to predict this. In last fall, or actually, obviously, the fall before the election, I said, folks, the media, the polls, everybody is lying to you. How do I know? You'll find out in a couple minutes more about my biography, but I was out giving motivational speeches around the United States, literally around the world, but more here in the United States, and I was talking to the average folks in between the flyover states, right? Or in the flyover states, not just the folks in New York and LA, but America. And I knew that the media was lying to us, folks. Not only, so here was my prediction for the election. I said, not only does, obviously Hillary's going to lose, I said Trump not only wins, but we will see a rip-your-face-off market rally of about 20%. I was wrong. Dow was up 25%, so I was a little bit wrong there, folks. Nailed this. So you should listen to me because I'm one of the only people on the face of the planet that predicted a Trump victory and a market rally. Matter of fact, today, folks, the same people who said in 2016, if Trump wins, the market and the economy are going to implode, are the same people who in 2017 said what? Trump has nothing to do with the economy and the market. So try and get it right, hypocrites, because it's not working for me. So real quick, folks, my name is Matthew Buckley. My call sign is Whiz. Pretty sure my parents liked me. They didn't. That was my God-given name, but that was a call sign I earned flying the FA-18 Hornet for the United States Navy for about 15 years. Graduated from the Navy Fighter Weapons School that many of you know as Top Gun, and I also flew 44 combat sorties over Iraq. Had an absolute blast. Got to fly in the backseat of a MiG over Pakistan. Flew with the Blue Angels, and as I said, did 44 combat sorties over Iraq. Right underneath my aircraft right there, that's Kuwait. That's about how big Kuwait is, in case you wanted a visual. In the background, just above the canopy, is Iran, and then there's Iraq. That's how tight this Persian Gulf lake is. So I had an absolute blast, folks. But you obviously don't join the Navy to be rich, but I was always interested in finance growing up. My dad, reading the newspaper each morning with his coat and tie before he'd go into work, and the back section, I'm like, Dad, what is this, hieroglyphics? He said, no, buddy, those are stocks, and here's how they work. You buy a Happy Meal from McDonald's today. If you own the stock, it might go up in price. So I was always interested in finance. So when I was on active duty as a young naval aviator, I taught myself how to trade stocks, and eventually heard about these things called options, and was kind of furious I didn't know about options before I learned about stocks, because I never traded another stock again. I mean, why buy the cow when you can get the milk for free? And here's what was even cooler was I applied everything I was learning flying a fighter aircraft. Being disciplined, managing risk, having a strategy, contingency planning, knowing when to get out of a bad situation before it gets worse, or even when to get out of a good situation before it gets worse. And I applied it to my trading, and it worked incredibly well. As a matter of fact, I went over to the business world when I got off active duty, wrote a book transitioning from C-level to C-level, and started working doing a lot of business consulting with a lot of companies, for example, on the screen. Now, real quick, since I have worked with these folks in the past, or currently do, I'm a fiduciary in these names. Will never tell you what's going on specifically in these names. I don't trade in these names. But looking at that screen, that should let you know that I have a lot of SA, we'll call it, situational awareness, that just a lot of traders, you will not find another trader out there who has this SA that I do into corporate America. It's awesome. I know who's hiring, who's acquiring, who's firing, who's going to grow. Good stuff. So eventually my returns were kind of blowing the doors off of even what I thought was pretty damn good. And eventually I popped up on the radar of one of the largest equity options volatility arbitrage firms in the United States, a vol arb firm headquartered right there in the Chicago Board of Trade, called Peak 6 Investments. Awesome company, awesome people. Helped start a hedge fund when I was there. Helped build the retail brokerage called Options House. Just absolutely incredible. And I'd be lying if I didn't tell you I felt like Valentine in Trading Places, man. But at the end of the day, just like in the movie Trading Places, this ain't rocket surgery, folks. It's not that hard. You need a little common sense, and well, sometimes that ain't too common, but and you too can trade very, very profitably. While I was there as well, I was the managing director of strategy, and also I was the founder and CEO of the Options News Network, ONN.TV. It was essentially the CNBC for options. You know, John and Pete, I know John and Pete pretty well, John and Pete Najarian, and they do a great job, but still CNBC kind of pays lip service to options. So we went out there for about 3 years and we did a great job giving retail traders and investors such as yourself a behind the scenes look at what's going on in the options field. Got to be honest with you, no offense to anybody from Chicago, I'm a Navy guy, man. I need a beach. I need warm weather. So I packed up my squadron and we moved down here to South Florida, where TGO is going on its eighth year in business, folks, and in the financial training space, that's a pretty damn long time. As you all know, there's a lot of snake oil out there. We ain't snake oil, man. There's right or wrong, black or white. There ain't no gray. So very, very fired up to be speaking with you guys today. So let's get all that out of the way. Why did I start with that? Because you can't just jump in and start looking at trades. You really got to know the background of who you're listening to. So as I said, folks, 2017 was an epic year for me personally. I've been doing this for about a quarter of a century. I've been trading equity options, about half that time professionally, and 2017 year was my best year. You could not, every pullback, folks, and I can't even, I mean, I could pull up my brokerage platform, but just about every pullback in 2017 was political. There's Trump saying he's going to rain fire and fury down on a sovereign country, North Korea. There's Trump's obviously a racist because of the riots in Charlottesville. Then we had Don Trump Jr. met with a Russian. He committed treason. Then we had a Comey memo, and then we had a failure to repeal Obamacare. All of those were violent, short-term pullbacks to be bought. There was no pullback last year that was what? Fundamental. That there wasn't a Fed pullback that freaked us out. There wasn't a horrific earnings. Every event was either geopolitical or domestic. And then off to the races. We had a couple, oh my God, are we going to get tax reform passed? We will, or maybe we won't. And then December, we just always go into a holding pattern anyway. And then I predicted in December, I said this, folks, you can become a member and watch all our live trade brief replays. We nailed this in the past. Since October, we've made over $75,000 in portfolio gains based on $100,000 model portfolio. We have been absolutely crushing it. Before the elections, I said to get long the financials. Trump's going to win. The financials are going to print money. We had some of our members in 20 contract positions on our Goldman Sachs trade made $150,000 on a long call diagonal with Goldman Sachs in I think it was 5 or 6 months. Not here to pat myself on the back. I'm here to give you my bona fides, so to speak, about why I'm going to talk about the trade I'm going to talk about and where you should be looking at. The ink wasn't even dry on Trump, doing his victory lap on the tax plan, which I got to be honest with you, folks. And here's where my spirit animal, Jeffrey Gunlock, and I depart. He's saying the S&P will have a negative return for 2018. Sorry, Jeff. You and I were flying formation with the 2017 Trump call. Now I'm peeling off and going bullish. Folks, to this day, I'm looking at a Dow that's up over 200 points today. It's almost passé to look at the TV and see another bottom third that says record day for the markets. We haven't even seen, around February-ish, March-ish, we'll really see people getting more money in their paychecks. Companies, last count, over 100, from Southwest, JetBlue, Walmart, AT&T, giving money to their employees out of the blue based on this tax reform. So, folks, I haven't even seen the impact of it yet, and the market's going up. So as earnings start rolling back onto the flight deck, better than expected, the average company, S&P company that I saw math-wise is going to experience an 8 to 10% earnings per share increase just because of taxes. So that's a good thing, bullish. Now let me be Eeyore. Let me be a Hornet pilot, and where the hell am I freaked out? A geopolitical event, folks. Something goes bump in the night. Remember last October, folks, I got to be honest with you, I got very, very I'm not going to say squeamish. We went to almost all cash. Let's just say that not only do I have a lot of business connections, I got a lot of buddies who work in a very big building in Washington where they wear uniforms, and they said, hey, Whiz, we got 3 CSGs, carrier strike groups off of Korea. The last time we had 3 battle groups operating together in the Pacific was World War II. We were, from all the, let's just say after a couple drinks with some buddies at the Army-Navy game, we were going in October. And Trump was talked out of it by China. Said, let us try and sit on our nephew a little bit more, and of course they didn't. But now North Korea is kind of at the negotiating tables, at least about the Olympics. Bottom line, folks, Iran, Saudi Arabia, they're kind of fighting proxy wars in Yemen with the Houthi rebels. So a North Korea bump in the night or a war in the Middle East ain't getting better, folks. Iran getting nuclear weapons, Saudi's going to get them. There are a lot of geopolitical potential black swan events out there. Other than that, I don't see anything stopping this market other than one of those. And I gotta be honest with you, nuclear war in the Korean Peninsula, you don't have to worry about your portfolio. Everybody's will be at 0. It'll be horrific. But Jeffrey, I disagree. So I'm kind of giving you a little bit of a strategic brief. That's how we trade here at Top Gun Options. It's called SOT, Strategic, Operational, and Tactical. So this is the way we brief here. I just gave you a little bit of a strategic brief about what's going on in the world, then operational, and then tactical. Operationally, folks, Trump's already moved on after the ink was barely dry to what? Infrastructure. And obviously he didn't get one Democratic vote in the Senate. Take that to heart. Not one Democrat in the Senate voted to lower your taxes. 90% of Americans will get some money back in a paycheck. How do you, whatever. Anyway, so the reason I give you that little political rant is infrastructure should be bipartisan. Moose and Rocco in the Union, moving concrete, moving steel, railroads, all this stuff Democrats should be on board for. So hopefully it's not like pulling teeth, folks, and this infrastructure spending that Trump wants to do should happen. And that should be bullish for the market, okay? So there, and again, folks, we do 4 live trade briefs Monday through Thursday every day, or Monday through Thursday at 1 o'clock for about an hour and a half. I manage 4 different model portfolios, each obviously on a different day, from a retirement portfolio to a weekly options portfolio. We did a weekly options trade last week on Amazon that made $1,800 in 4 days. Beautiful weekly options trade. And of course, I logged out here. Sorry about that. So. Now let's get tactical. Infrastructure. And let me show you this one trade that we put on. This was sent out to my members. What was the date on this? So January 5th. I'm recording this on January 11th. This January 5th trade was on GE. Come on, Whiz, that's the dog of the Dow. So remember this date. When did I put this on? January 5th. It's called synthetic stock. And we're going to do it again here, but it's a dog of the Dow. Let's take a look at this, guys. Let's take a look at GE. Holy shnikes. So if you haven't seen the fall of the dog of the Dow, here's, what's his name, leaving, and everybody finding out he used to fly around the world with 2 jets, you know, because he's as important as Trump. Just cutting their dividend. I mean, this thing catching a falling knife. No, I watched GE. It's GE, folks. It ain't going out of business. So it started skimming along the treetops here, you know, right around this 18, maybe $17.50-ish. When was that? January 5th? Where's January 5th? Right about there. So we put on a synthetic stock position when the stock was at $17 and I think 49 cents. So right about here. We put on synthetic stock at $17.49, and in the past week and a half, it's gone from $17.49 to $19.09. That is a hell of a pop in GE, especially when it's a $17 stock to go from 17 to 19. Nice percentage gain. Why? Ladies and gentlemen, this is GE. GE is in just about everything. I mean, they got out of finance and you can't, I don't have my camera on, but literally at the bottom of CNBC, I just looked up right now, it said 2018, the year for GE, question mark. I kid you not. But anyway, GE, folks, locomotives. For 15 years, I flew in front of 2 GE F404 afterburning engines, aircraft engines, locomotives, medical imaging, stuff. GE is in everything, folks. And just take a look at a 2-year chart. Boom. It ain't going to zero, folks. And I wish I could say I'm really, really that good, but putting on a synthetic stock position here, I did a live trade brief today. Some of our traders are already up. Now, my members are up 71% in 2 weeks on a trade that's out to what? January of 2020. This trade has 2 years to work. So, I'll answer what you might be thinking right now, because one of my newer members asked me this a couple hours ago. They said, Whiz, is it too late for GE? No. I think it's going to get back up to the heydays of being a $30 stock and then some. It ain't over for GE, folks. As a matter of fact, I think it's a new beginning. And the infrastructure spending, locomotives, aircraft engines, steel, medical imaging, building new hospitals. Remember, folks, Trump is, it's funny because Republicans are looking at infrastructure thing going, we should be leery about this because that's a lot of spending in Democratic stuff. So I just don't see how this doesn't get through. And GE, I told you, was skimming across the treetops and now is getting airborne. Great looking trade, and negative, it is not too late to get into GE. But I'm not, I don't, again, I'm an options trader. I train people how to trade equity options on their own. You don't buy the stock, folks. Let's use options. So what I'm going to do is show you how to place a trade that is essentially your long stock. It's called synthetic stock for a reason. So right here, new GE synthetic stock. So I did this, like I said. We did 25 contracts before. I'll take a look. We might have to do a little bit less than that. But so synthetic stock. All right, Whiz, that's a big SAT word. What does this mean? With synthetic stock, the only two things you don't get, number one, are you don't get the vote. You're not a shareholder, obviously. So, and it's not like your vote counts anyway. With these, all these, Carl Icahn type of guys. There were 100,000 votes counts more than your one. So any, the couple times I've been assigned stock or whatever, and I've gotten like a proxy or a vote thing in the mail, they go in recycling right away. So you don't get the vote. And the other thing you don't get with synthetic stock is you don't get the dividend. I'm not a dividend trader. When I manage my mom's account, I put her in some conservative dividend producing stocks, but that I can deploy my capital other places. I really don't trade for dividends. GE used to have a solid dividend. That's one of the reasons it was so attractive. But guess what? One of the reasons it did do this slide for life was what reason? Well, Whiz, they announced that they were going to cut their dividend. That, I get it. That's on its face, that should worry you, like, oh boy, that means they're going to put that money somewhere else instead of giving it back to a shareholder. For me, that short-term pain is worth a lot of long-term gain. But since we're doing synthetic stock, I don't get that dividend anyway. So write those two things down. You don't get to vote, who cares? And you don't get a dividend, I don't care. So, and it's a hell of a lot cheaper than buying the stock outright. So let's do this tactic. And remember, if you don't learn anything from me today, first of all, I failed. Second of all, it's this. There is no such thing as an options strategy. And I paused for effect for a reason, because some of you might just, all right, this guy was good until that, now you lost me. Trading iron condors is my favorite strategy. It isn't. Folks, that's a tactic. A strategy is something high level. Win the war against ISIS. A financial strategy would be saving for college, short-term income generation, buying a boat in 6 months, managing risk. Those are strategies, folks. A tactic is an iron condor, is synthetic stock. So this tactic, doing synthetic stock, supports my strategic mindset of being bullish on infrastructure spending and the overall market in the 2018 and beyond, to infinity. So here's how you create synthetic stock. Let's open an options chain. I use Options House by E-Trade because I help build Options House. So I'm going to hop in my Super Hornet here, and I'm going to fly the speed of light all the way out to Jan20. Why? Because that's as far out using leaps as I can to be bullish on GE. Now, if you understand the options, just the basic of options, you understand this. If you buy a call, you're bullish, right? That's options 101. Well, Whiz, I'm bullish on GE. I'm going to buy some calls. You got it, man. Awesome. Well, if you buy a call and you're bullish, the converse is true. If you sell a put, you're also bullish. So you ready for this? When you sell a put and you buy a call with the same expiration, Jan20, and same strike, we go as close to at the money as possible. And since it's 19, right between 18 and 20, I go deeper in the money. The tie goes to the runner deeper in the money. Buy a call, sell a put, same expiration, same strike. Watch this. So let me just build a quick, I'm going to sell the Jan 2018 puts, but I'm also going to buy the Jan 2018 calls. Let me take a look, and let me just show you the risk graph. You ready? What does that, this is investing 101, folks. What does that P&L chart look like? Long stock, Whiz. Duh, exactly. So everybody check this out. When you, again, let's do this one more time. When you sell a put, you're bullish. When you buy a call, you're bullish. With the same expiration, Jan 20, and same strike, you get synthetic stock. This is called a 1 delta trade in option speak. What does that mean? Meaning the rate of change. If GE goes up 99 cents today, our trade goes up 9 cents. If it goes up $10 tomorrow, we go up $10. If it goes down, it's a 1-for-1 change. It is a 1 delta position. Now, a couple things. First of all, what is the, and again, I shouldn't have clicked on analyze without break. It's like breathing to me. When I click on analyze, my eyes, not only as a Hornet pilot, but more importantly, or just as importantly, as an options trader, go to one place and one place only. The sad face right here, max potential loss. Why, man? I saw infinite. For years, I've begged these guys to switch these. Always, always, always look at max potential loss first. Why? Well, folks, if you ain't okay with potentially losing that, why would you even look up here? So obviously, folks, the risk in this trade is what? The same as if you were long stock and you own the shares. GE, there it is right there, the blue line. Whiz, GE can go to what? 0. Can it? Sure. Will it? No. It's GE, folks. It ain't going to 0. I get it's a $19 stock right now, and people are calling maybe for single digits. I'd buy that with both hands. It's GE, folks. It's the what? It's the longest. It's the only surviving Dow component, right? However many years, folks. It ain't going anywhere. So let me ask a rhetorical question, since we're not in one of my live trade briefs where you can all answer. How could I fix this? So the option, I can't call Options House and go, hey guys, it's Whiz. I'm a smart dude. You guys know GE ain't going to 0. Let's not, don't margin me this much, right? What could we do to show the Options House risk department that, hey man, even if it does go to 0, I'm okay? You know what we could do? We could add what I call a disaster put. What would be a disaster? Well, most people say, hey, if a stock goes down 20%, you know, that's a bear market. That would be a disaster. So not even, but I mean, a 20% loss in GE, you know, again, the world's ending. So why don't we just go, let's hop in our time machine and go all the way out to Jan 20 and buy, I don't know, maybe the 15? Now take a look at what I did. And I want to preface this with, you know, my call sign isn't Whiz because I can make trades like this. It's obviously for some other reason, but you ready? We were risking about 19 grand in that last trade, right? 3, 2, 1 looks at max loss, $4,500. Take a look at the P&L diagram, guys. So there's the blue line, GE. So what did I do? By throwing in this put, I said, hey guys, if for God forbid it does implode below 15, it sucks for GE, but not for me anymore because I'm long below 15 by buying these puts. I call it a disaster put. So I also reduced my risk by 14 grand. Awesome. Now, so, and you can see down here, the amount I'd spend is about $1,500. Here at TGO, I manage $100,000 model portfolios. So I might, what did we do on the last one? 25 contracts. So my SOP, my standard operating procedure is I tend not to want to risk more than 5% or 5 grand on any one trade. That's for my front month trades, like, you know, January, February, March-ish. If I'm going out really, really far in time, and it's you don't do synthetic stock, folks, on Tesla or Twitter, something that might not be around in 2 years. Who knows? You do it on solid, an Amazon, a JP Morgan, a Raytheon, a defense stock. You do it on a solid company. So I'm okay with going up a little bit more in risk. And you can see down here that the most I'm going to spend is about $3,800. So it's obviously a debit spread, Whiz. I'm buying some at the money calls and selling some puts. So spending about $3,800, folks. And like I said, the trade we put on back here is already up like 71%. Most hedge funds, if they were up 71% in 3 years, they'd close, let alone in that amount of time. So The one thing I'm not going to do right now, usually when I put these trades on, I put on a front month upside call and I sell it to bring in a little bit of a monthly payment. One of the reasons whoa, that's a lot of lines. The reason I'm not going to do that is this thing is on a little bit of a tear. I'm going to teach you a lot of things when you become a member at TGO, but one of the things is when something is on a tear, either join it or get out of the way. So usually I sell a front month upside call to bring in a little bit of nice premium each month. It's a nice car or mortgage payment, but not in this case. And we also, I think it's, and earnings are coming up. We could put on a, when's the next expiration? No. I'd be breaking my own SOP as I just briefed you on it. This is on a tear, and with a tear, you either join it or get out of the way. So the last part of this trade that I do with, if it was some other position maybe that was kind of moving sideways to slightly up, so that's on a tear. This is, let me just kind of draw an angle like this. This is kind of a good climb schedule. This is a tear. So if something's on a good climb schedule or flat, just kind of hovering, I'll sell a front month upside call and bring in, I don't know, $500-600, maybe even $1,000 each month. That's good living, man. So these, we closed at JP Morgan, long call diagonal. I had on for about 15 months in November. That was a $45,000 gain. One trade, guys, similar type of trade, risking about, I think it was like $8,000. And I think I paid about $4,000 for it, and it made $45,000. I just told you about the Goldman Sachs trades around the election that were up 150. So this is a nice tactic to take advantage of, you know what, I don't want to buy 1,000 shares of GE right now. Look at this. I can, put on this amount or spend this amount and a fraction of what I would use to be long the stock. So this is a great potential trade on GE. I like it. It's in our model portfolio, as I showed you. We eat our own dog food. I'm not just throwing out a trade. So here's this is our member page. This is in the Analyze Your Trade and Debrief portfolio every Thursday at 1 o'clock. So where I analyze some of my members' trades, and we also put on new ones. Apple, we've been printing money on. Here's a bull put spread that we closed out today for a $1,900 gain, max profit. Risk in 56, right around my $5,000, and made about made $2,000 in 2 weeks on an Apple trade. So folks, if you're new to options, you're an options Jedi master, whatever it is, come to TGO, folks. I'm saying, if you think you're good, we'll make you better. Just like, the movie Top Gun. Actually, if I mention that movie, it's a $50 fine or 100 push-ups. So I owe you guys 100 push-ups. But if you're interested in what we do here at Top Gun Options, you want to learn about synthetic stock, you want to learn about that Apple bull put spread, do me a favor, just go to our homepage here, topgunoptions.com. It's pretty easy to remember. And just scroll down to the middle area here. What type of trader are you? And if you're a skier, these kind of look familiar, beginner, intermediate, advanced. And these are just 2-week test flights into our different portfolios. Beginner is kind of our accelerated retirement portfolio every Wednesday at 1 o'clock. Longer term trades, just like this GE trade or our defense stock, Raytheon. Intermediate, we trade all the way out in time, but we also trade the front months, okay? January, February, March, the Amazon, Apple, bull put spreads on the front month. And then the advanced portfolio really isn't, it's not advanced due to skill. This is where we trade weekly options. So every Monday at 1 o'clock, we do a weekly options live trade brief. I just showed you last week we did a Amazon bull put spread that made $1,800 in 4 days. So it's not like it's advanced for skill. It's just I put it under there because it's a lot more tactical trading, folks. You can make $1,800 in 4 days, and you can also lose whatever the max risk was, $4,500. But again, with options, your risk is defined. You know it before you place the trade. Before any mission in the Hornet, before any trade I place, I know my max potential loss. How can I get my ass kicked? And if I don't, if that's unacceptable, I either don't do the trade or the mission, or I change it somehow. Change the contracts, change the strikes. But I'm going to teach you all that stuff here, folks. I don't want to take up too much more of your time. Love the GE trade. I'm not the type of guy that, usually I show up at Aspen, and people are like, oh my God, you should have been here last week. 18 feet of powder, or I surf too. People are like, oh, you should have been here last week. The waves were 8 feet. Well, I wasn't. I'm here today. Doesn't matter if you didn't get into this synthetic stock a week and a half ago. You're here now. You're hearing from me now. If you believe my strategic mindset, my commit criteria, that 2018 is going to be great for infrastructure spending, even a Caterpillar, something along those lines. We looked at Caterpillar, guys, but it's too rich for my blood. Up here at $1.70. And it's had a massive run in December. Why? Same thing as GE. People are starting to look at some of the dogs and who are going to benefit from the infrastructure spending. To me, I like a Caterpillar, but for $17.50 whenever we got into GE, I liked it even more. Okay? All right, folks. Again, just go to topgunoptions.com and take a 2-week test flight into one of our services, and then you can just upgrade into maybe a monthly or an annual subscription. Okay? Folks, have a great rest of your day. Happy hunting. Make sure you hedge, and God bless. And I'll talk to you guys later. We'll see you.